I think the market is finally recognizing that inflation is not going away. The Fed is resolute. They made it clear several times recently that they really want to get the inflation rate down to 2%.
High inflation, rising interest rates, corporate earnings being affected, they're all still sort of here for a while longer. So you got to be careful.
Despite the high inflation, fears of a looming recession, Salk is making the case that the consumer remains strong. Spending is not slowing down.
For the first time in 3 years now, credit card balances are back above where they were pre-pandemic.
Is inflation getting better or worse? Are the markets ignoring the possibility of higher inflation? What can we expect in the coming months? Can we see higher interest rates ahead in 2023? In this video, Peter Schiff discusses trending topics like inflation, Fed rate hikes, and how both of them have been affecting the economy. He also provides his own analysis of the situation and what he thinks the future holds for the market. To know more details, stay tuned till the end of the video. And for more videos on economy, crypto, and market trends, don't forget to subscribe to my channel. Let's dive into the video now.
Well, I'm wondering how the markets are going to react, and so far they've kind of been up and down, and maybe people don't really know how to react. But from my perspective, it's bad news for anybody who was really hoping that the Fed has won the inflation fight. Powell has been talking about disinflation, and from that perspective, we have had numbers that have improved sequentially and on a year-over-year basis, but that was bound to happen. When you had a rate as high as 9.1 or wherever we peaked out so far. But if you look at the rate of improvement this month, the year-over-year number, I think, was 6.4. That was down from 6.5 the prior month. So that's not much of an improvement. In fact, maybe this is the trough for improvements. Maybe in February, we're going to see an uptick in the year-over-year inflation numbers. And the monthly number was still a pretty big number. I think it was up, 0.5 for January. That was a little bit higher than they thought. They upwardly revised the prior month, which was, I think, reported as down 0.1. Now it's up 0.1. So inflation is starting to turn back up, and I think we're going to start to see hotter numbers in future months, and that's going to throw cold water on the idea that the Fed is finished and can start cutting rates based on victory over inflation.
Two major economies posted their latest inflation numbers. As expected, inflation rates in both the U.S. and U.K. were lower. Consumer prices in America rose 6.4% in January from a year earlier, down from last year's peak of 9.1% in June. Price gains in the UK also dropped from 11.1% in October to 10.1% last month. But although many economists and investors have been encouraged by slower headline inflation, the reality is that inflationary pressures are still rising. The Federal Reserve's preferred inflation measure is running below its 2% target, and some officials say they are open to more stimulus if needed to revive inflation. Officials said they will closely monitor inflation and other economic data in the months ahead, and that they were prepared to act if necessary to support the economy. Many experts like Peter Schiff believe that inflation is only going to get worse in the coming months. Stay tuned to learn more about why inflation is expected to get worse in the coming years. Also, be sure to give a big thumbs up to this video.
We've been creating inflation for over a decade. All the years of quantitative easing put a lot of inflation into the pipeline. And the Fed has barely withdrawn that liquidity. I think we're still seeing the impact of that, and especially the inflation that it unleashed during the COVID pandemic. So I still think we have a ways to go to catch up. Meanwhile, government policy is still inflationary. We have very expansionary fiscal policy. The government is running enormous budget deficits. That's highly inflationary. And even though the Fed has raised rates, you still have negative real rates, and we're not encouraging people to save. People are still borrowing as much as they can. The savings rate is near the lows. The credit card debt is near record highs. So the Fed's rate hikes have not really altered the spending and savings decisions, which I think are key to bringing the inflation rate down. So as long as people keep on spending, I don't see any way we're going to get down to 2%. Even if they strip out food and energy, you're still nowhere near core. nowhere near 2%. In fact, now they're talking about a super core where they exclude shelter, which is even more irrational than excluding food and energy. But even if you exclude shelter, the year-over-year increase is still 4%. So that's double the Fed's 2% target. So I don't think they're going to get anywhere close to 2% before they actually start stimulating again. I think we're going to be in a very severe recession, and we may even be in the midst of another financial crisis. And with that backdrop, the Fed is going to start creating inflation, not fighting it.
Although many economists and investors are encouraged by the latest trends, a deeper look makes clear that pressure on consumer prices is still rising. U.S. consumer prices rose briskly at the start of the year, a sign of persistent inflationary pressures that could push the Federal Reserve to raise interest rates even higher than previously expected. Still, the Federal Reserve's most recent interest rate hike has not had a significant effect on consumer spending and saving decisions. Inflation is not just a problem for central banks. It is also a problem for businesses and consumers. When prices go up, it eats into businesses' profits and consumers' purchasing power. But despite concerns about the potential for inflation and Fed rate hikes to impact spending and saving decisions, people are still borrowing at near record levels. If borrowing continues to increase at the current pace, it could lead to serious financial problems down the road.
They implemented a lot of changes over the years, particularly, I think, in the early 1990s. And they actually did that because they didn't want to cut Social Security. But as you know, Social Security benefits are tied to the CPI through these COLA adjustments. And the idea was that if we can just make the CPI lower, then we won't have to raise Social Security payments as much. And so that's a way to cut Social Security, is to pretend that we have lower inflation than we actually do. Now, they didn't come out and say that. They said that they thought the CPI was overstating inflation. And so they fixed it so it wouldn't overstate inflation. But now it understates it. I don't think it ever overstated it. I think that was just a pretense so that they could, rig it so that it would have a lower number, which is what they wanted. That was the goal of redoing the CPI. But, if you took the CPI that we used in the 1970s, because people have done these numbers, just take the 1970 CPI and input the data that the government is using to calculate the current CPI. And if you do, the inflation that we had last year was worse than any year of the 1970s or 1980s. So this is the worst it's ever been last year. And, it's not getting any better. I think this improvement is transitory. We're going to see higher numbers, probably by mid-year.
It's no secret that inflation has been on the rise lately. It's important to keep an eye on inflationary trends because they can have a significant impact on the economy. Peter Schiff believes that we are likely to see higher inflationary pressure in the economy in the coming months. Whether or not inflation will actually increase in February is yet to be seen. However, it is important to keep an eye on the development, as it could have an impact on the financial markets. What do you think about the current state of the market? Can we see higher interest rates ahead in 2023? What will be the Fed's next decision? Let me know your thoughts in the comments below. For more videos on economy, crypto, and market trends, don't forget to subscribe to my channel. You can also hit that bell icon to never miss any video. Also, be sure to like and share. I'll see you guys in my next video. Adios, and thanks for watching.